This is Asia Trade. I'm Shery in Tokyo. The top stories this hour. Asian stocks set for gains after a tech rally lifts Wall Street, with Korea's $880 billion AI investment plan in focus. Traders on yen intervention watch as well as the currency hits a 40-year low. Iran determined to maintain control of the Strait of Hormuz while also casting doubt on peace talks the U.S. says will resume on Tuesday. And the U.S. Supreme Court denies President Trump's bid to remove Fed Governor Lisa Cook, even while expanding his powers to fire government officials.
I'm Haidi, Stroud-Watts in Sydney. Take a look at the setup for trading across Asia. And as Shery mentioned, Japan will be front and center when it comes to the weakness that we see in the yen. Japanese equities are expected to climb in the session as we have that 40-year low for the currency. That 4-decade low against the US dollar also being compounded by we're seeing that rebound across several big US tech names as well, lifting Wall Street overnight. It was still pretty choppy, though. If you take a look at Micron, for example, trading in a massive 12% range, but managing to close out on the high. So you're seeing the picture when it comes to the Nasdaq 100, 2.25% higher. That bodes a bit more calm when it comes to Korean Kospi futures. We're seeing indicated flat at the moment. Chicago Nikkei futures at this point, that last read there, lower by 0.4%. But dollar yen 161.92, just a whisker away from that 162 level. Watch for the exporters in particular when it comes to that boost to profits, and that's obviously been helping that ascent to record highs for Japanese equities. The geopolitics story continues to hold some traction, though. Brent crude 1.6% at the last trade. New York traded crude, though, off by 0.7%. That advance that we see expected to mostly be held. We're expecting US-Iran talks in Doha. There's lots of conflicting signals from either side. Doubt is being sowed over what the next phase of negotiations in terms of the 60-day clock, right, to end the war. The traffic when it comes to the Strait of Hormuz slowing over the weekend after we saw the flare-up in that conflict. Gold is trading pretty flat at the moment. We've got Sydney futures looking fairly muted as we head into the Tuesday morning session, Shery.
Haidi, let's discuss all of the market moves with senior editor for markets and Bloomberg opinion columnist John Authors. Also with us is chief Asia FX and rates correspondent Ruth Carson. John, let me start with you because we've had this on and off rotation when it comes to tech. It seems, at least in the overnight session, we saw those AI dip buyers back in action.
Yes, we did, but I wouldn't put too much emphasis on this, in that we're still quite a long way below the low, and a lot of what we've seen was the Elon Musk companies. SpaceX rebounded quite nicely, and Tesla had its best day, I think, in something like 5 years. So that in many ways that can skew perceptions. I don't think this was a significant moment in what's obviously a hugely important story, but I wouldn't be as 2% gains in the market go. This is one of the less exciting ones, I think.
Right, and we'll continue to watch the feed through here in the Asia session. But Ruth, let me turn to you because the other big story right now is the yen also hitting that 40-year low finally against the US dollar. I mean, we saw this as inevitable, but where do we head from here, especially since we're not seeing any real signs of potential intervention from authorities?
Yeah, absolutely. Dollar yen grinding higher. It was a painful grind higher, but we finally got there. Now we know that the yen has indeed breached that 161.95 mark to get to a 40-year low. Intervention risk is still there. The question is, how live is it? How close we are to officials actually wading in? Now remember, dollar yen has been grinding higher, and one of the requirements, or at least one of the things that officials watch for when it comes to the necessity to intervene in markets, is the pace of yen weakness. If there's a sudden sharp drop in the yen, absolutely you have to be on high alert. But what we've seen is a grind higher in dollar yen. So yes, the threat is there. But for traders, it might just be another day of waiting, watching, trading, and seeing where to make your bets.
Joan, I wanted to get back to the geopolitics story as well, because you've written about how perhaps overdone the, one-way optimism that financial markets have in this ceasefire and longer-lasting peace being almost a done deal. Does the recent flare-up challenge that confidence at all?
I would say it should, but no, it does not appear to have challenged the actual confidence that's revealed in the markets. It still looks very much, and the one that particularly surprised me is how confident people seem to be. If you look at inflation swaps, that inflation is coming down. The oil prices you're showing there similarly is not quite all the way back to where it was before the conflict. If you look at longer Brent for the end of the year, but plainly no longer at the kind of level that really implied a major shift in the economy. I think what you might find more with the Middle East situation is that we now have to work out where we go next. There has been a differential effect from the closure of the strait for as long as we've had already. Certain countries have been particularly on the wrong end of that and may find that they're now due for a rebound. India perhaps being the most obvious example. Also, some countries have had more of an impact on growth rather than price, i.e. those countries that really are exposed to oil imports through the Strait of Hormuz have simply, you've seen more of a decline in growth, and you haven't seen that much inflation, which now gives central banks there more leeway, the Eurozone being the most interesting case in point. While there's more of a risk, arguably, that this appears to have fueled quite a significant pickup in inflation to me here in the States. That's not reflected in all the market views. It is reflected in what people are expecting from the Fed. And we could have a very interesting few months while people actually work out what the lasting effects on rates and inflation has been of this, lengthy closure of the strait.
Yeah, John, we'll talk a little bit more about what's going on at the Fed, but Ruth, I wanted to get your take in terms of whether we're seeing much of an impact on the dollar, right? The greenback is now back to being kind of the dominant currency within that space. What do we make of this, and where does it go from there, given that, as John alluded to, there's still a lot of questions over Fed independence and where the policy position goes from here?
Absolutely. There's a reason why it's called King Dollar, and it's on 80% of all FX trades in a $9.5 trillion market. There's literally no alternative to it. And right now, macro investors, macro traders are really focusing at least on what they can see, which is rate differentials. We've heard from a new Federal Reserve Chairman, Kevin Walsh. Markets have judged him to be more hawkish, probably even more hawkish than they expected going into the last FOMC meeting. So what do you do in that environment? You buy the world's reserve currency. And what do you buy it against? Basically almost everything out there. And it's also against commodities like gold, because ultimately investors go to where they can get yield, where they can get capital gains and income. And we know that the dollar is both seen sometimes as a petrodollar, but also it is a beneficiary of the huge AI boom that is sweeping the US stock market. So what do you do in that environment? You buy the dollar, and that as a result is causing currency weakness to ripple across everything from the Aussie dollar, which is trading below 70 US cents, through to the yen, which we're seeing fall to a 40-year low against the dollar, and emerging market currencies.
And before we actually move on to other currencies, John, let me get your take as well, because we had seen, of course, the U.S. Supreme Court giving that carve-out for the Fed. Does that remove a meaningful tail risk when it comes to the greenback now?
I think that tail risk had probably been removed already. I mean, the great urgency to fire Lisa Cook was to try to install a majority of the 7 governors of the Fed who sit in Washington in time to veto the regional heads of the Fed who took over for new 5-year terms at the beginning of this year. So if it had been possible to fire Jay Powell and Lisa Cook by the end of last year, which was what the administration was trying to do, then you could have had some kind of a political putsch. I think at this point, it certainly would have amazed people if the Supreme Court had actually gone the other way, because it was clear that the justices were inclined to support Fed independence if they possibly could, and that would have been a disaster for the markets. I think if there really had been that clear of an undermining of the Fed's independence. We haven't seen much of a reaction today, simply because it really, at this point, was much less likely to have to really have an effect.
And of course, we've been talking about the other side of the dollar trade, right, Ruth? And you were talking about some of those currencies that we're watching. The Taiwan dollar, one of them, given that we saw a little bit of strength, but that might not necessarily be the case in July.
And the Taiwan dollar is definitely one that's watched here. It might not be the most exciting currency always in the trading session, but look, it is a tech FX in many aspects. We know the TSMC story, for example, is a big one influencing where Taiwan dollar trades. And absolutely, all eyes will be on that as well this coming month, especially in the wake of dollar strength.
Our senior editor for markets and Bloomberg opinion columnist John Authors, our chief correspondent for FX and rates in Asia, Ruth Carson. Still to come here on the Asia trade, Samsung SK Hynix set to invest almost $900 billion to drive South Korea's AI and digital infrastructure push. We have Counterpoint research director Tom Kang joining us for a deeper dive on this ambitious project next. This is Bloomberg.
South Korea is orchestrating investments of at least $880 billion into chips and data centers, a plan it says is essential to surviving the AI era. Samsung and SK Hynix will each build 2 new chip plants, rapidly expanding production to meet soaring demand. Joining us to discuss this is Tom Kang, research director at Counterpoint. Tom, great to have you with us. I mean, I just said soaring demand, but there are also fears of potential oversupply. How do these investments play into the global landscape of chips?
So this project will double DRAM memory capacity, double in the next 5 years. And that comes to an average of 15% growth in supply every year to double the size. Now, that's quite ambitious, and it's planned on the premise that the demand for memory will continue to be healthy in the coming years based on this AI boom. So that is a bit of a risk factor.
What have you seen so far when it comes to these chip demands to justify all of these investments?
So the demand is rising about 20% every year over the last 2 years, and we're seeing supply is growing just 10%. So there is a gap in supply and demand, but the industry has never seen 20% demand growth in consecutive years. So this is not the usual type of demand growth. So we can't say that this will continue forever, but there is certainly a shortage in supply of memory. So this will help the bridge the gap between the demand and supply. But you have to factor in that there are Chinese companies that are also doubling their supply and capacity. So there are other factors in this industry.
At least when it comes to Samsung and SK Hynix and stabilizing pricing, does it help that they do have longer-term customer agreements that stabilize the market?
Correct. So recently, SK Hynix and Samsung have both secured long-term contracts with key clients, which means that sometimes the clients will pay upfront to secure capacity. So this is a more safe situation for Samsung and SK Hynix, and this will help their investments because at least for 2 years, they have clients that will absorb all this extra capacity that they're building out. So it is a mixed kind of signal to the market, and it is sending out signals that somewhere in the world that there's going to be investment in capacity. So this will lower the fear of rising prices in DRAM.
When it comes to production output, how long does it take usually for these fabs to become operational and actually be able to commercialize them? And I do wonder about the timeline because we've also seen reports by media talking about Apple trying to buy from, as you mentioned earlier, Chinese chip makers as well. If the time frame coincides, would that be a meaningful pressure for these South Korean companies that are outputting all of these extra chips at a time when these Chinese competitors could become viable?
Correct. So you can say that if you're increasing your capacity within the same facility, it will take about 15 to 24 months. But then if you're creating a new site, then it takes much longer because you need to buy the land, you need to secure electricity, you need to secure water, and then you need to start leveling out the land and then building up the facility and then buying the equipment and installing that. So that will take at least 3 to 4 years. So the fastest way is to actually increase your productivity within the same facility, and that's what a lot of current memory suppliers are doing right now. And you just talked about the Chinese players. The Chinese players have been investing heavily since last year. So we'll see meaningful production come out end of this year and next year. So that's an extra supply factor in the market. And I think that's why Apple is talking about diversifying and even getting memory from Chinese players like CXMT.
At least when it comes to the memory market for now, we are seeing that oligopoly of Samsung, SK Hynix, and Micron as well. Does that give some semblance of continuity and stability when it comes to the investment cycle, especially if it's backed by the government as well?
Correct. Because of this kind of oligopoly, the government, I think, is intervening because they're seeing excess profit being created by these two companies in Korea, and the government wants this to be reinvested in the economy and the profits to be spread out and trickle through all layers of the economy. So the government is actually making a political gesture towards these semiconductor companies to kind of not just think about their profits, but think about the whole industry and the economy. So this is a gesture that's pushing these two companies to break their habit of kind of investing together and then kind of raising prices consecutively, back to back, observing each other.
Do you expect the South Korean government to become more involved in this strategic sector, especially when it comes to pricing, especially when it comes to these investments and broader policy backing?
Correct. So I think the government will kind of first look at, you said pricing. If there's any price fixing, which is not being observed now, but that will be on their monitor. And then they will also monitor if these memory players are getting too greedy. So that's also a concern of the government. And they would want this extra money to be invested in the economy and see it benefiting to the GDP growth of the whole country.
Tom Kang, Research Director at Counterpoint, really great to get your insights as we digest, of course, that $880 billion AI investment by South Korea. Let's stay in the country because we are getting the main industrial output numbers, and it's a contraction of 0.9% year-on-year. The estimate was for growth. It's also a deceleration from the previous month. When it comes to the month-on-month number, is also a contraction of 3% for the month of May. Of course, you have to remember this is for the previous month, so we are talking about still getting the impact of the Iran war, oil prices and refining activity, despite the fact that we've been talking about the semiconductor strength in the country. More ahead, this is Bloomberg.
We are getting some updated expectations when it comes to the oil market from Morgan Stanley cutting their oil forecast on the return of supply with the reopening of the Strait of Hormuz. MS cutting its dated Brent oil price forecast as we've seen that faster than reopening than expected, I should say. US exports remaining high, though Chinese imports remaining low. The analysts on that team saying in a note that came out on June 29th. So the third quarter 2026 forecast cut by $15 to $75. Fourth quarter down to $75 as well, and down to $70, Shery, by the time we get to the third and fourth quarters of next year.
And Haidi, here are some of the other corporate stories that we're following at the moment. Authorities in Taiwan have raided the offices of Supermicro as part of an investigation into the alleged smuggling of NVIDIA chips into China. In a statement, prosecutors say the operation targeted the residences of 6 individuals and the sites of 3 affiliated companies. Supermicro shares ended the U.S. session more than 8% lower. Rocket Lab is buying satellite operator Iridium in an $8 billion cash and stock deal. The acquisition combines Rocket Lab's launch and satellite-making businesses with Iridium's low Earth orbit network and spectrum assets. CEO Peter Beck says that the merger will create an end-to-end space communications provider.
Rocket Lab today, we're the second most frequently launched rocket, and we have a large spacecraft business and components business. But really the third leg of the stool was always an application. And by combining Rocket Lab and Iridium together, we really make that complete picture. And what that essentially means is we are a self-launching company. And I think if you look at other companies that have their own rockets and can build their own satellites, it's a pretty powerful combination.
Still ahead on the Asia trade, we speak exclusively to the U.S. CEO of Chinese retailer Miniso about their expansion push and the unique challenges of the American market. That conversation coming up in just a few minutes. More ahead, this is Bloomberg.
Take a look at how we're setting up as we're just about half an hour away from the start of trading across major markets here in Asia. Japan will be one to watch for sure as we have that 40-year level when it comes to the yen, just a whisker shy of that 162 level. That will boost equities, which of course have already gotten that boost from the currency to record highs. But watch out for exporters in particular in terms of the element of really seeing the benefit of that weaker currency. We'll be watching, of course, also the sort of yen intervention aspect as well, although there's questionable whether there's many options are left for financial regulators and currency regulators in Japan. S&P futures at the moment looking pretty flat at this point, we are watching oil markets. We had a change in expectations from Morgan Stanley when it comes to the oil price. We do have that continued back and forth when it comes to the US and Iran on where these peace talks are at. We have Iran, through one top official, really ratcheting up the rhetoric, Shery, when it comes to their desire to continue controlling the flows through the Strait of Hormuz, right, after the flare-up that we saw in the conflict over the weekend. So, as we spoke about a little bit earlier, it certainly isn't sort of dominating the trajectory when it comes to market sentiment, but perhaps that is something that investors should be watching out a little bit more for.
Yeah, we're also watching some breaking news out of Japan. The jobless rate coming in for the month of May at 2.5%. This is in line with economists' estimates, also in line from the previous figure in April. The job-to-applicant ratio, 117 jobs available per 100 applicants right now. This has fallen a little bit from the previous month. It's also coming in slightly below economists' expectations. Of course, we continue to watch the impact of this yen weakness, a 40-year low against the U.S. dollar, on livelihoods here in Japan as everything becomes just more expensive, starting from oil and gas, and of course how that will translate into demand and whether or not we are going to get that meaningful wage growth to revive the economy in a sustainable way here in Japan. At least the labor market seems to have remained tight. The jobless rate, again, 2.5%, Haidi.
Yeah, Shery, let's talk about the consumer. And Bloomberg Intelligence says the Chinese consumer brand Miniso's operating margin may remain under pressure this year on rising operating costs in the US and repositioning in other overseas markets. Let's get more on the outlook for the company's American business. And joining us exclusively is the Miniso USA CEO, Tom Bartlebaugh. Really great to have you with us, Tom. So tell us about the outlook, because, of course, we have seen perhaps surprising resilience in the US consumer. Is the outlook good when it comes to the market segments that you guys deal in?
Yes. First of all, thank you for having me. Good afternoon. Good evening. The outlook is positive. The sales and the consumer have been very resilient over the past 12 months, and I don't see anything changing when it comes to retail for us specifically. I see us having a strong Q3 as well as delivering a strong Q4 holiday season.
How do you find brand recognition in the North American market at this point, and how is that feeding through your expansion plans?
Yeah, so we're doing quite a few things with our own proprietary IPs, such as Yo-Yo. We're doing an exclusive exhibition in Times Square at the Grand Central Station, where we're launching an exhibition, kind of an art exhibition, to introduce the American consumer to our own proprietary IP, which is Yo-Yo. And we do those things, and we're also doing things with artists, as Katy Perry. We were recently in her Band-Aids music video. We're coming up on her next video, Watch It Burn. So our products are being exclusively used these ways to introduce them to the U.S. consumer and get people more familiar with not just the brand Miniso, but more familiar with our proprietary IP.
I wanted to ask about the number of stores, because I think as the first quarter of this year, we're at about 500 stores. Correct me if I'm wrong. Do you have a target for end of 2026, 2027? Is there sort of a broader long-term number that you're looking at in terms of that North American network for store numbers?
Yep. So for 2026, we're looking to increase our store count by about 20% year over year. So we'll open roughly 100 new stores. We're well on our way to that. We're more than halfway there already this year, and we have no reason to believe that we won't be able to see that through to the end. But continued 20% growth is kind of what the future looks like. So this year, 20%. We haven't yet done the 2027 budget, but I expect it to be somewhere in that 20% increase.
What are the major risks, do you think, to growth, whether you're talking about sort of macroeconomic risks or risk to the branding strategy when it comes to the IP strategy that you've talked a little bit about already?
Some of the risks would be whether or not we're, buying and delivering the right products to the consumer. Do they want these items? Are they excited about these items? We recently did a collaboration with our own proprietary IP, Yo-Yo, a cross collaboration with Disney with the newest Toy Story movie that just came out. So imagine Toy Story characters and Yo-Yo coming together at the same time. So that cross collaboration in conjunction with the movie, but it's that continued partnership, of delivering with global licensed IP cross collaboration, as well as continuing to deliver on our own proprietary IPs. Do these products and do these IPs continue to resonate with the consumer? So there's risk there, and I see IP launches kind of like movie launches. Sometimes they work well and they're very successful, and sometimes they miss. So when you see those misses, you just need to course correct quickly, but continue with that formula of partnering with these big global licenses like Disney, Sanrio, Pokemon, et cetera, and making sure that our products and the licensed product is resonating with the consumer.
Tom, you've talked about the competitive advantage of the brand and the business over its perhaps domestic competitors, and obviously that comes from the speed of manufacturing, the speed of design from China. Do you worry about the downside in terms of US-China tensions or tariff uncertainty at all?
No, I think I think it's a lot of media that talks up the hype between the tensions between the two countries, and I think it's something that, from a consumer standpoint, I think the consumer really is just looking for quality service, quality product, that you're delivering a quality experience in your stores, and I think they don't care where that product is coming from, and I think they're really interested in is it a quality experience, quality product, and is the experience something that I want to come back for? And that's something that we're able to deliver at Miniso.
I wanted to ask you about the numbers we've seen when it comes to same-store sales growth recently, as well as margins going forward. Do you think the levels that we've been seeing this year are sustainable?
I do. Yeah, I absolutely do. The consumer, I think, has been resilient, as I've mentioned before, and I think what we have planned in the back half of the year, there's no reason to believe that we won't be able to achieve the targets that we set forth for ourselves. And I think there's some upside actually in late Q4 with some of the exclusive launches that we have coming up. And there's some things that we have in the works that I can't talk about, but I think it'll definitely drive foot traffic into the stores and also help boost up those comp sales numbers.
There are these giant Miniso stores here in Sydney as well, and I have to say the last time I walked in I was actually very surprised by the type of merchandise and offerings that was available. And you've talked about this, right, wanting to go beyond just collectibles and blind boxes. It's lifestyle, it's apparel. Do you think that message is getting through, and what's part of, I guess, reframing the brand as you say, you want it to be a global brand versus an Asian brand?
Yeah, so the Miniso lands, the ones that you have in Australia, I think we just opened one recently there, have been hugely successful. Consumers love them. They love coming to the store. They're more experiential. They love going into the stores and spending time, and they're staying in those stores a lot longer, which means they're spending more. So we're introducing that model in the United States. Our first Miniso land will open up in Columbus, Ohio, in late September, 1st of October, and then we'll be also launching another Miniso land in Las Vegas on the Las Vegas Boulevard. It'll be the largest store that we have in the United States. It'll be greater than 15,000 square feet. But that's really the mecca of Miniso in terms of the stores, physical stores. As you see in Australia, you see in China, these Miniso lands are huge, and they're like an amusement park, and consumers are coming into them and finding product that you wouldn't find in your everyday Miniso. So there's a lot of exclusivity product in those stores. But yes, we're leaning hard into lifestyle and apparel and accessories, as well as food and beverage and beauty products that you'll start to see not only in the Miniso lands, but you'll see that expanding out into the everyday stores.
Tom, really great to have you with us. So appreciate your time, Tom Bartlebaugh, there, CEO of Miniso USA. More ahead here on the Asia Trade. This is Bloomberg.
The U.S. Supreme Court has rejected President Trump's bid to fire Fed Governor Lisa Cook in a split ruling. Bloomberg's Fed and economy reporter Enda Curran joins us now with more from Washington. Enda, Governor Cook survived, but is another big winner here, Kevin Warsh. Has the central bank independence been reaffirmed this time?
Well, it's a big ruling, Shery, like you say. There is a lot to unpack. In terms of the near-term takeaway, the Supreme Court has made it clear that this particular case against Governor Cook needs to go back to the lower courts for them to figure out. They struck down this case on process grounds, and that was the argument that Governor Cook had brought to the court, that she wasn't being fired, on appropriate grounds, so to speak. She's obviously also contesting the underlying allegations as well, which are allegations of mortgage fraud. So on paper, cutting through the legal judgment, it is a win for Governor Cook, near term at least, and obviously a win for the Fed. The judgment made clear that in the eye of the justices, they think monetary policy needs to be kept very separate, very independent of political cycles. There was a commentary in the judgment around how, allowing the president to dismiss governors at will would trigger all kinds of market turmoil and volatility, and that ultimately the Fed deserves a carve-out among agencies. But as I say, near term, it's a solid win on paper for the Fed and Fed independence, but it does open up broader questions going forward.
Let's talk a little bit about those broader questions, because Justice Kavanaugh said exactly what you're talking about. Uncertainty over Fed independence itself could destabilize global markets. I mean, what implications would this have had for the narrative around central banks that are not just facing challenges in the U.S., but almost globally at this point?
Yeah, well, the headline would have been, had the Supreme Court opinion today made the case that President Trump could dismiss Governor Cook on the grounds that were laid out against her, well, then it would have opened up scenarios whereby the president could come in and dismiss other governors on the Fed board as well. President Trump has spoken openly and publicly about getting a majority on the Fed board. And of course, that's all about getting a majority of those who share his view in the economy, which is one for lower interest rates, at a time when many would argue the Fed isn't in a position to lower interest rates. So had that happened, it would have been a clear dent to Fed independence. It didn't happen. However, the justices did say at the Supreme Court, they didn't define what makes up for cause. They didn't explain much more beyond on this ruling as to whether or not the merits of this particular case would stack up to offer cause. And they said, in fact, President Trump could attempt to dismiss Governor Cook again. That pathway is open to him. So, and after the ruling, by the way, President Trump was out pretty quickly on social media making the point that he will immediately look at ways to pursue this case again. So, as I say, there's a lot to unpack in this. And because it's a legal judgment, it's open to analysis and interpretation in different ways. You have your win for Governor Cook, you have your win for Fed independence, but the Governor Cook case hasn't gone away. It's just going to move now to a different court and continue to be pursued by the administration. And then, broader questions about Fed independence, near term, sure, it's a tick, but plenty of analysts I spoke to today say there are still question marks over the durability of that going forward.
Bloomberg's Fed Reserve and economy reporter Enda Curran there with us with the latest. And of course, we're watching commodities broadly, but specifically the latest when it comes to oil prices there. New York traded crude holding most of that downside, 0.8% lower. Had a couple of developments. Morgan Stanley cutting its dated Brent oil price forecast, citing, of course, the faster than expected reopening of the Strait of Hormuz there, but still also talking about the high US exports and the Chinese imports picture remaining low in that broader picture. But of course, this, as we expect, that resumption of US-Iran talks in Doha, conflicting signals from either side, and in particularly relevant is around really ratcheting up the narrative about having control of the Strait of Hormuz ahead of these new talks. And that came from Iran's Deputy Foreign Minister, signalling that Tehran remains very much firm on maintaining control over the Hormuz. These remarks to Iranian state television coming ahead of that next round of talks with the US. We're expecting them to take place in Qatar on Tuesday.
Well, there'll be a meeting on that tomorrow in Doha, and they're going to Qatar. I think they've already left, or they're just about getting ready to leave. So we'll see how that goes. But we're doing very well on that front. But the meeting in Doha is going to be perhaps important, perhaps not. We're going to find out.
From Ron, how oil markets are reacting to these developments. Let's bring up Bloomberg oil trading reporter Ronway Neal. Ronway, we're also getting this Truth Social post from President Trump saying that gasoline retailers must get prices down immediately. They're too high considering oil is at $68 a barrel and headed south. So clearly domestic gas pump prices are still top of mind for the president. But what are we seeing in terms of the price action on this market, given the level of uncertainty over the Strait of Hormuz and how these talks are going to proceed?
Right, Heidi, like you rightfully mentioned, I think the market's eyes are on the upcoming peace talks that will be held later today in Doha. Now, of course, what people are hoping for is that through these talks, which is, of course, expected to pave the way for a more permanent end to this war that we have seen that's emerged about 3-4 months back, is that market is hoping there would be more clarity. And, of course, for the physical markets, the Strait of Hormuz remains a single most important factor that really affects oil prices. Now, of course, we have Iran saying that they do want to maintain its control over the strait. And that's a new development since the war was waged a couple of months back. Before this, of course, the strait remains open and it was free for commercial shipping. However, this is expected to be an item that would be debated by the US. Right now, the Strait of Hormuz traffic has slowly resumed, or rather, it has slowly gained since it came to a standstill at the height of the conflict. Some shippers, those that are more risk adverse, they would choose to perhaps wait and see to see what's coming out from the peace talks, while there are those that are a bit more adventurous that have went ahead with the risks. So right in the Strait of Hormuz, we see two very clear passageways, one that is more US friendly and one that's more Iran friendly. And of course, the market is hoping that through these talks, there will be more clarity over how these transits could continue to take place even after the 60-day negotiation period.
When it comes to the sort of outlook for the market, I was just passing through this Morgan Stanley note, and it talks about the twin factors of US exports remaining high and Chinese imports remaining low, right? So does that kind of take us full circle as we look to the expectations for next year? What do the fundamental supply and demand picture look like if you assume that the strait will remain open?
So if we look past this disruption at the Strait of Hormuz as a result of this war, if you remember, right towards the end of last year, the markets were expecting us to be headed into oversupply, and oil prices were expected to dip on continued production from OPEC. But of course, since the Iran war, much of these factors have changed. We have UAE leaving OPEC. And of course, right now, as a result of the Iran war, we have US exporting more crude oil. And as also a result, the world's largest importer, China, its appetite for crude oil imports remains muted, which is why these two factors, coupled with the faster than expected resumption of commercial traffic through the Strait of Hormuz, has led banks like Morgan Stanley to revise their price forecast further downwards. Now, of course, banks like Morgan Stanley, they are expecting that the market in the year ahead, in 2027, would resume and will go back to what was initially expected, which is an oversupplied market. So based on this trajectory, banks like Morgan Stanley would expect oil prices to continue to fall. And if we can look at what has happened so far this year, right now the supply disruptions have led to a temporary blip or temporary raise in oil prices. But in the longer run, which is going to come in the next year or many more years down the road, the wider market expectation remains, which is markets remain oversupplied and are headed in that direction.
Bloomberg oil trading reporter Ronway Neal, of course, with the latest on oil prices as we're seeing the downside pressure from the Iran war. And perhaps that's also reflected on the May industrial production numbers out of Japan, because year on year, we're seeing a huge surprise to the downside of a contraction of 1.7%, contracting from gains in the previous month. Also much below economists' expectations. We had seen the downside surprise in industrial output also in the South Korean number for the month of May. We have seen strong AI-related equipment exports, not only in Japan, but also also in South Korea, but perhaps it's that refining sector that's feeling the pressure. More ahead, this is Bloomberg. We're about 6 minutes away from the market opens in Japan, Korea, and Australia. Let's bring in Bloomberg Markets reporter Anthony Stevens for the setup. I mean, we saw that big rebound when it comes to chips globally. Could we see the upside in today's trading?
It was actually a really whippy session in the U.S., resolved to the upside. We saw SpaceX, Micron, a lot of these stocks trading flat to down early, and they closed on the upside. So you see this kind of intraday volatility helping out the trade. That should calm nerves in Asia, especially in the likes of SoftBank, which has been on a downtrend over the last couple of days, especially as the hyperscalers in the U.S. find a level. We saw Google lead gains on the NASDAQ. So pretty decent setup here for Asian markets. One big cloud continues to be the volatility around the memory space. I mentioned Micron trading in almost a 13% range overnight, and that kind of tracks the Korean volatility recently. So that is going to be something really closely watched. Also, currency weakness, whether it feeds into the weakness in equities or they continue to be separate, that is another macro trade. And lastly, we have the huge foreign selling that continues in both Korea and Taiwan. Yesterday was a massive day of foreign selling in Korea, almost $5 billion. Taking the year-to-date total to almost $92 billion. So that continued foreign selling really has to be watched for the future of this market.
Bloomberg's market reporter Anthony Stevens, of course, will continue to watch that overseas selling that Anthony just talked about, but also everything to do with the Japanese yen here in Tokyo, because we have seen it now that close to that 40-year low. We have touched that level past 161 at that 161.98 in the overnight session. Of course, we are on intervention watch also for authorities potentially being able to step in to really support the currency. We haven't seen any moves now. And we have seen actually Citigroup giving up on their long yen call at this point. The market opens in Sydney, Seoul, and Tokyo are next. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens as we head towards the Iran-U.S. peace talks on Tuesday. Haidi, overnight in the markets, it was all about that chip rebound globally. The Philadelphia Semiconductor Index gaining almost 4%. Will we see that lead into the Asia session?
Happiness of that action, right, tells us somehow I don't think that the volatility is over just yet, but we've got to talk a little bit later about this big investment, these ambitions from South Korea in terms of really consolidating its AI prowess. But Shery, for Japan, it still comes down to what we're seeing in these levels of the yen.
I mean, we were expecting the yen to touch that 40-year low against the U.S. dollar. It finally did. We're talking about that 161.98 level. Those are levels that we haven't seen since back in 2024 when there was massive intervention. Of course, this year we have already seen more than $70 billion spent by authorities to support the currency. We haven't seen any signals that they're ready to get back into the markets as of yet. We have seen them talk. We have heard all of that narrative about bold action to be taken, but nothing is necessarily happening when it comes to the currency. Of course, the rate differentials with the U.S. still big, and we do have that support for the U.S. dollar. In the meantime, we're seeing that upside, not surprising, on the Nikkei and the topics. We'll be watching the tech sector very closely, anything related to artificial intelligence, given that we had also equipment makers in the overnight session leading the gains around semiconductors. Lots of equipment makers here in Japan, so do watch out for those. We have seen JGBs pressured. We continue to digest economic data, especially industrial output that came just minutes ago. Japan surprising to the downside. That was interesting because we have seen, of course, very much strength when it comes to the chip sector, perhaps also the lingering effects from the Iran war, refining capacity and so forth. We have seen in South Korea, take a look at how they're trading, because also in that market we saw industrial output missing expectations and surprising to the downside, of contraction as well when it came to the month of May. We're seeing that upside in the Kospi. The Korean won still weak. I mean, against the U.S. dollar, we have seen Asian currencies pressured very much so, continues for the Korean won, despite the fact that we have seen, of course, the government announced that $880 billion in investments, anything related to chips, to AI. We have heard from analysts say that this investment could actually lead to some support in the Korean won. These companies would need to really buy Korean won in order to invest in South Korea, pay their employees in Korean won, that could actually support the currency. We're not necessarily seeing that in today's session. Mid-1500, Samsung, SK Hynix, they're supposed to be two new fabs as well, Haidi. So we'll continue to watch the AI trade in the Asia session.
Yeah, huge ambitions in those numbers, right? But the other story that we've been following, Shery, is obviously the story of Fed independence, and we had the Supreme Court handing out that decision on Lisa Cook's future at the Fed. It's interesting that you saw Treasuries, the bond market, essentially shrugging, right? It doesn't seem to bring any kind of meaningful change to the outlook for Federal Reserve independence at this point. But really, the reaffirmation of the Fed's unique status held that Lisa Cook must receive the required procedural protections before any four-clause removal can proceed. So we have been passing that. At the same time, you've got JP Morgan saying that the 10-year yield underprices Fed tightening risk. So what we're really watching is really how we're setting up for Fed expectations and whether that could lower the bar for markets to price in further tightening by the Fed as we get that June employment data out on Thursday in the US trading session. Watching oil, of course, this is Iran kind of ratcheting up talks about its desire and intention to continue controlling the management of the Strait of Hormuz ahead of this next round of US-Iran peace talks that we're setting up for in Doha. Brent crude at the moment 1.6% higher there. We had New York traded crude holding on to losses of under 1%. And we're watching gold as well, which of course has been one of the most disadvantaged asset classes since the war began, down 24% since late February. We're seeing gold holding on to most of those losses. Australia coming online pretty flat after putting on the most in about 2 weeks, Shery, in the previous session.
Heidi, plenty for investors to digest. Let's bring in Chris Brigati in order to break all of this down, CIO of SWBC. Chris, great to have you with us. Should I start with the AI trade, given that we're in the Asia session right now? That rebound that we saw in chip stocks, after that on and off tech sell-off, that rotation that we saw, is this sustainable today?
I think it is. The AI trade has got a lot of legs to it, a lot of momentum behind it, and the ultimate benefit for the market is to really kind of get on the wheels behind this and really ride the train down the tracks. And I think the AI trade really has a lot of room to run.
Where specifically are you looking at? Because even within Asia, we're seeing so much divergence, including with Chinese tech as well.
A lot of my focus is looking at what I call AI adjacent trades. They're trades that are going to benefit from what's going on in AI, and it's everything from memory chip makers down to hardware and durables that are going to be needed to build out the data centers. So it's things that might benefit from the AI adjacency of the trade, and ultimately those types of companies can really carry a lot of benefit for investors and not have the same type of volatility or exposure directly related to it. And there's a lot of upside in those.
Yeah, let's talk a little bit about upside. How much does it compare with the valuation levels that we're seeing already in these run-up of stocks in the heart of the semiconductor trade? Of course, those chip makers that we're talking about in South Korea, in Taiwan, in China as well. Do adjacent sectors have more room to run?
I think they do. I think the AI trade is a multi-year trade. We have many years to go, and the memory chip makers are specifically benefiting right now from the need for their memory chips to be included in the entirety of the need for AI. So as we see AI expand, as we see more data centers, we see an increased need for the memory chips, and they're going to benefit down the road for a further period of time. They've had a massive run. There may be a pullback in here at some point, but when you're looking at the different memory chip makers, including Samsung, SK Hynix, and Micron, kind of the three big ones, you're really looking at companies that have had a big run, can continue to go further. Maybe there's a pullback in here, but ultimately I see more upside coming.
What are you watching here in Japan, especially when we talk about adjacent? We could talk about chemicals, we could talk about equipment makers as well.
when you're looking at things that are going to be used as components for these types of trades, so you're looking at something like Hanmi, those types of companies that are having components, whether it's directly related to the building of the chips or ultimately the infrastructure needed, and those types of companies can really continue to do well, and they should. If we believe in AI, which I do, that it will be a longer trade, then those types of companies have a benefit, and down the road, they're going to see some really big upside as well.
Yeah, we could see even more upside if the Japanese yen continues to weaken. At what point does the currency at a 40-year low against the U.S. dollar become a risk?
You know, that's the big question, and that's something that we're really struggling with to determine where does the risk of the Japanese yen continuing to be weak play into the trade. I think there will be an opportunity to buy it at some point, but there appears to be more downside coming, and so I wouldn't be ready to jump in now to say that there's an opportunity yet. But ultimately, I want to see that some real benefit to the market, some real change in terms of what the yen is doing, and a little stability. And once we see some stability, there will be a chance to enter that trade.
Definitely when it comes to markets, that stability seems to be lacking in the South Korea market with all of that volatility that we've seen. The Korean won also continues to see record lows. What are you expecting to see in that market that seems very much concentrated on a couple of stocks?
That's the thing. The Kospi is very heavily concentrated between Samsung and Hynix. What they do is they are probably approximately 50% of the market value of the index. So as those two stocks go, so will the Kospi. So it's very unidirectional. It is very highly correlated and tied to those two securities. And ultimately, if we do see a pullback, and we have seen that periodically, we do expect the Kospi to kind of take it on the chin a little bit and underperform. And perhaps that's a good entry point for players. Like I said, I think the trade has legs, and these AI adjacent type of trades specifically should have that opportunity. So looking for a pullback might be the right opportunity for investors.
Chris Brigati, really good to have you with us, CIO of SWBC. Take a look at Samsung and SK Hynix right now. We're not necessarily seeing that pullback in today's session. Still gaining ground. Of course, we have heard now that these two companies will be building 2 new fabs each. We have seen that $880 billion of announcements, that initiative from the government when it comes to investing in chips and AI. More ahead. This is Bloomberg.
Take a look at what we're watching when it comes to broader commodity markets, and oil markets still in focus as we head towards this new round of talks between the US and Iran. But at the moment, we're seeing New York traded crude holding on to loss at about 0.7%. Brent, though, seeing upside of over 1.5%. Morgan Stanley cutting its dated Brent oil price forecast with the Strait of Hormuz reopening faster than expected, but also balancing out that forecast with lower than expected imports from China, higher exports, I should say, from the US as well. At this point, gold at the moment still holding those losses. It's down about 24% since the start of this war. Well, Iran's deputy foreign minister has signalled that Tehran remains firm on maintaining control over maritime traffic in the Strait of Hormuz. The remarks to state television coming ahead of the next round of talks with the US scheduled for Qatar on Tuesday.
There'll be a meeting on that tomorrow in Doha, and to go into Qatar. I think they've already left, or they're just about getting ready to leave. So we'll see how that goes. But we're doing very well on that front. But the meeting in Doha is going to be perhaps important, perhaps not. We're going to find out.
For more, let's bring up Bloomberg breaking news editor Matthew James MacArthur. And Matthew, so obviously a lot of posturing from both sides ahead of these talks. What are we expecting?
Yeah, so I don't know what to expect exactly. We're not even sure if the talks are going to be direct or not. If you ask the U.S., Jared Kushner and Steve Witkoff, two of Trump's closest advisors, are on their way. They're ready to talk in person. According to the deputy foreign minister of Iran, who said on state TV today, they are sending a delegation to Doha, but they aren't going to be talking directly with the Americans. the U.S. has often accused Iran of saying one thing in public and then doing something different. So we're just going to have to wait and see if or what, if anything, is going to come out of the talks today.
There are a fair few sticking points, right? The Strait of Hormuz is really one. We had a True Social post from President Trump saying that gasoline prices need to come down immediately. So clearly, domestic pump prices and the domestic consumer and economy are still top of mind for him. How much do you think is going to be an issue that Iran or its intermediaries are going to want control over which vessels and how they're passing through?
Yeah, I mean, if you ask Trump, he'll often say prices are coming down in oil. He doesn't care about it. The U.S. has plenty of oil. But as you said, the sticking point is going to be the midterm elections coming up. So he wants to get the oil down. He says as long as Iran does not commit to any nuclear weapons, it's going to be fine. But we're just going to have to wait and see about how hard he can wait for the oil story to develop. He's pressured a lot of gas companies to lower the oil prices domestically. So he's trying to work sort of both sides of it. And he's also giving a lot of pressure to Oman. They've sort of indicated they'd be open to controlling the Strait of Hormuz with Iran and making sure that they are the ones who control which ships and what oil passes through. But obviously the U.S. doesn't want that. They have said that Iran is committed to not having any tolls in the Strait of Hormuz. Iran says, yep, we're committed to that for the 60-day period of time during the talks. After that, it gets a little murky.
The other sticking point is obviously what happens with Iranian proxies like Hezbollah, right? And in fact, just over the last day or so, we've seen Hezbollah saying that Israeli forces have continued with attacks. Do we expect any progress to be made there, given that we're talking about parties that are not necessarily as part of these peace, talks as the US and Iran are?
Yeah, I mean, it's a really good question. The U.S., Israel, and Lebanon signed an initial trilateral framework on a deal, but as we saw, the Israeli forces bomb parts. They said they destroyed a Hezbollah tunnel in southern Lebanon earlier. So that's sort of the crux of the matter. Israel and the U.S. have been resistant to criticizing each other in public, but we know from some other reports that Trump and Netanyahu have often disagreed about the tactic of the approach, about what exactly is agreed to. So that's definitely going to be something to continue to watch.
Right, James MacArthur, DC breaking news editor there. And take a look at how European futures are trading at the moment. We're seeing a little bit of upside after we had that global chip rebound. DAX futures also pointing to gains of about 0.5%. The euro holding steady this after we saw a weekly loss against the U.S. dollar. This week it's all about the ECB forum in Sintra. We already heard from the ECB president Lagarde saying that the rate hike this month was actually justified and that Europe has become more resilient to external shocks. The European Union and China also setting an October deadline to make progress on their brewing trade disputes. Let's get the latest with our chief North Asia correspondent, Stephen Engel, joining us from Shanghai. Steve, at a time when Brussels is really concerned about this flood of Chinese exports, how meaningful is this deadline? Is it more symbolic or is it practical?
Well, that's the big question. Again, is it just the proverbial kicking the can down the road? Because, again, many EU leaders for a long time have been complaining that they've been pushing this issue with China, but with very few results. And the Chinese also have been asking, they're ready for potentially any freeze in economic or trade ties with the European Union if these talks that began really just Monday in Brussels between the counterparts on the trade ministries, if they're not meaningful talks. So again, they've delayed this till October for a number of different reasons. It gives them time, both sides, to find ways where they can find agreement. This is what the EU Commission's trade representative, the negotiator, Maros Sefcovic, had to say following the first, if you will, beginning salvo of talks.
Were intensive, focused, and constructive. My objective from the outset has been clear, to begin balancing the trade relationship between the European Union and China. The gap is widening. China's export to the EU keep rising, while our market share in China keeps shrinking.
So again, Šefčovič has highlighted a number of times the unsustainable trade deficit that the European Union has with China. In 2025, it was 360 billion euros, about 410 billion US dollars. He again says that is unsustainable. Also, the export controls from China is a sticking point as well for industrial places like Germany especially. But the Germans, with Friedrich Merz, the chancellor, essentially preferring dialogue, at the same time, when Volkswagen is talking about potentially 100,000 job losses, shuttering of factories, BMW, by the way, has slashed profitability forecasts, citing the slow growth in China. German car exports to China fell by 1/3 last year. So, you know, there is some significant issues. But what they don't want to do is create a wall with China where they're not talking and then create further problems, obviously, because the European Union wants the chips from China. They want the rare earths. They need that engagement with China. But at the same time, they are seeing a flood of subsidized Chinese products into the European Union. I was at the Mobile World Congress here in Shanghai. I talked to a number of people who actually said, you know, Europe is a playground, the quote unquote, a playground right now for Chinese consumer electronics goods.
Yeah, so plenty to discuss, and we haven't even touched on WTO reforms, IP rights. Yeah, so to be fair, what can really be achieved by October? And I guess also, why October?
Well, again, it's going to be the next round of the European Leaders Summit, October 14th, I believe, October 15th. So it coincides with that. It also follows Xi Jinping's trip to the United States in late September. I believe the feeling is that it's still a few more months away where they can find some deliverables, the two sides can. And there was a glimmer of hope coming from the Chinese readout of these talks, but also another warning. Let me just say this. The Ministry of Commerce, of course, the Commerce Minister is Wang Wentao. The MOFCOM statement in Beijing says China and the EU agreed to establish a joint monitoring mechanism and share trade data. So that is good. However, in a separate statement that we got the same day, Wang Wentao says the EU's trade and economic tools and restrictive measures against China have seriously affected normal China-U.S. economic and trade cooperation and the stability of global supply chains. So there's still quite a few differences to be hammered out. Whether 3 or 4 months is enough time, that's the big question, or if it's just kicking the can further down the road.
Stephen Engel there in Shanghai, our chief North Asia correspondent. We do have more on the Asia trade. This is Bloomberg. Take a look at how Japanese assets are trading early in the Asia session. We are seeing the Nikkei gaining ground for a second session, being led not only by tech stocks. Of course, we had the global chip rebound in the overnight session, but also industrials. Do watch out for those car makers, those exporters that are taking advantage of the weak Japanese yen. We had already seen company forecasts by car makers that they could see a profit windfall of billions of dollars this year alone. This, of course, is a Japanese yen holds at that 161.96 level against the U.S. dollar. We're talking about 40-year lows, a level that we haven't seen since 2024 of July when we had intervention by authorities. So far, we haven't necessarily seen any signs of Japanese authorities coming into the FX space. So we actually had Citi just killing its long yen recommendation that it had just opened last month because they saw no real moves coming from Japanese authorities to support the currency. In the meantime, Haidi, we're still trading downwards when it comes to the currency against the greenback.
Well, Shery, Bloomberg has learned that government authorities raided supermicrocomputers offices in Taiwan on Monday. It's part of an investigation into alleged smuggling of chips to China using the company's servers. Let's bring our China correspondent Min Lo in Hong Kong. So, Min, what do we know so far in terms of what's been going on?
Hey, Heidi. So the prosecutors have not disclosed who exactly they have raided, but we understand from sources that they have raided the individuals, the residences of 6 individuals, as well as 3 affiliated companies, including Supermicro's office in Taiwan, as well as one of its distributors, Albatron Technology, and a Taiwanese data center operator, Chief Telecom. And as you said, this is part of a probe looking into whether Supermicro was exporting chips to China via its servers, NVIDIA's chips to China. And this is in violation of U.S. export control rules, even though it's not in violation of Taiwan's local laws. But Taiwan has been under U.S. pressure to match those U.S. export control rules, and it's now considering to criminalize these acts as well. So for now, it's not clear how prosecutors are going to charge these alleged smugglers. The last time, back in May, when there was a first public detention of alleged smugglers, the government had used a clause on falsifying documents to charge the alleged criminals.
What has the company's response been, and how might we anticipate Beijing will respond?
So Supermicro, of course, is saying that they are going to cooperate with law enforcement and that they take seriously their commitment to protect their own advanced technology and intellectual property. But this really sort of also heightens the compliance burden for many of these U.S. hyperscalers, right? Particularly companies like NVIDIA and AMD, when so much of the supply chain is tied to Taiwan. And of course, it accelerates this supply chain constraint for many of these Chinese companies looking to get their hands on these advanced chips. And for China, it sort of puts them in a bind, right? Because the Chinese government, I imagine, they can't really say anything that would implicate themselves and acknowledge the existence of these smuggling acts. But at the same time, I think China will likely, once again, push back against this idea on principle of going against globalization and this decoupling of supply chain. They might also, once again, remind Taiwan that it considers it a part of its own territory. And so anything the Taiwanese government does is probably seen as invalid in the Chinese government's eyes.
Bloomberg's China correspondent Miniso there. More ahead here on the Asia Trade. This is Bloomberg.
Speed is our only way forward. We must establish the core building blocks of artificial intelligence faster than any other country. Semiconductors, physical AI, and AI data centers are the 3 pillars of our next great leap forward.
South Korean President Lee Jae-myung on the $880 billion tech investment plan involving Samsung and SK Hynix. Of course, we are now looking at volatility in the sector, despite the fact that we had a cheap global rebound. It was even volatile in the overnight session. The Philadelphia Semiconductor Index, though, did manage to finish 3.8% higher or so. In the meantime, SK Hynix losing more than 1%. Kioxia also losing more than 2.5%. These 2 stocks right now, we're looking ahead towards a potential U.S. listing. SK Hynix could happen this summer and Kioxia in the spring, according to reports. But let's bring in our markets reporter, Anthony Stevens, for a breakdown of what's happening in the tech space right now. And Anthony, I had to laugh when I saw your note earlier that the Korean market is moving so fast. By the time we do the next TV hit, it'll be wrong. So what are you trying to keep your eye on right now?
Yeah, volatility is extremely extended. We have Korean volatility, trading above Micron's volatility. And that really highlights that the memory trade is getting very choppy here. There's a lot of news flow that is meeting the strong fundamentals. So the strong fundamentals is a very well understood story. But now you have capacity coming online from this huge capacity increase in Korea, but also the upcoming IPOs from the Chinese players in the back end of the year. And we just had a headline that one of the Chinese players has signed a $3 billion contract with Tencent for DRAM. So that's pressuring the memory space here. You have the Chinese starting to make some inroads into the DRAM space. It's really important to mention that DRAM has actually been where some of the more crazy margins have been for Samsung and Hynix. They're at around 80% margins just because of a sheer shortage of DRAM. So any sign that Chinese supply is coming on in that space will be taken badly. Outside that, Korea as a whole is also quite volatile here. You do see Samsung trading reasonably well as they kind of flesh out their plans to expand across the country. So Korea will be quite volatile as this memory trade kind of gets more fundamental news flow in the days to come and into the month end and quarter end. In terms of broader markets, what's interesting is that on the yen side of things, we do have a weak yen, but it is notable that Japanese exporters are not benefiting from this. Actually, the weakness in Japan today is on the exporter side. So the focus is completely on the AI trade today across Korea and Japan. In Japan, you are seeing some positivity on the AI trade following on from a pretty strong performance, as you alluded to, in the US from the NASDAQ and the MAG 7 index. So quite a differentiated picture here across the Asian equity market.
Yeah, it's been interesting, right, Anthony, because we even had industrial output numbers that were much weaker than economists had expected, both in Japan and South Korea, despite the fact that you would think, okay, you have so many chip exports, you have weak currencies, you could actually get a boost on that side. But before I let you go, how closely are you watching the yen? Do you expect authorities to step in?
So they have been very disciplined in waiting until London comes in. London is still one of the world's biggest FX centers. They want everybody sitting at their desk before they intervene. And they have stuck to that discipline. And I probably expect them to do so again if they are going to intervene at these levels. What is interesting is traders are starting to move this expanded band up now to 164 in line with the historical kind of pattern. So it'll be interesting to see where the line in the sand is drawn. We have a 2-year auction in JGBs today that will highlight the yield difference between Japan and the US. And until that yield difference is bridged, there is no fundamental reason for the yen to strengthen here.
Bloomberg Markets reporter Anthony Stevens there. Let's take a quick look at what we're expecting and setting up in terms of the Greater China trade later on today. A lot of upside, given that we have seen that, albeit choppy, rebound in the chip and tech trade overnight. You're seeing Taiwan futures up by 1.8%, following that Supermicron story very closely, though. Hong Kong tech futures also up by 0.5% there. As we count down to the China Open, let's take a look at the outlook when it comes to Chinese equities. It's been a banner year in that space for the world's second largest economy. 2026, though, has not been going as well as 2025. The MSCI China Index tumbling 15%. This is the worst performance globally after Indonesia. Let's bring our Bloomberg Asia Equities reporter, Miniso. So, Winnie, we know that the macro doesn't look great. Is that the key part of the underperformance? Because we used to have a situation where bad news would be good news for the markets in China, but that fiscal and monetary policy support hasn't been coming through.
Yeah, exactly, Heidi. Honestly, when you look at how badly the offshore Chinese stocks have performed this year, it is actually surprising and disappointing for many investors who, at the beginning of the year, really expected this bull run to continue because in the past 2 years, we had that big policy, as you mentioned, and also DeepSeek. But this year, although China might have ripped off that uninvestable tag, it is still lacking lots of catalysts. On the macro front, you just mentioned the consumer demand drag and also lack of stimulus. But on top of that, we have the weak earnings and also investors really putting most of their attention on these AI-related trades. So lots of attention on Taiwan and South Korea. So stealing the spotlight. And then beyond that, you still have these tensions between U.S. and China going on with also Chinese authorities trying to clamp down on the cross-border flows. That's also hurting sentiment. So lots of different factors coming into play to weigh on the Chinese offshore stocks this year.
Are there any catalysts that could turn that around?
Yeah, so at this point, unfortunately, we are most likely going to expect this underperformance to continue just because we don't see that clear catalyst just yet. But some of the things that might help turn around the situation is mainly on the macro front, if there can be a policy to support the consumer space. But for now, that looks unlikely because policymakers come up with these policies to support that growth target. But for now, because of the strong exports, thanks to the strong AI demand, that is supporting as just that single engine supporting China's economic growth, and hence a bit less urgency for policymakers to step in. And on top of that, another potential catalyst is that turnaround from the global AI trade. If we see a bit of pullback there, that can potentially drive investors away from these high-flying tech stocks and back into the Chinese names. But for now, because we also don't see much of an earnings upside when it comes to the Chinese internet stocks, that also shows a bit more near-term headwinds for these offshore Chinese markets.
Yeah, tell us a little bit more about onshore.
So the onshore picture is a lot brighter here. In fact, when you look at the CSI 300, up about 6%, and that's supported by the strength in these hardware stocks. And in fact, we are seeing investors looking for opportunities on the upstream of the AI supply chain. Lots of names, including the raw materials, the e-fabrics, and the gases, the glasses, all rising. So, for example, when we look at this stock called Special Gas is up about 800% so far this year, and another stock, an e-fabric stock called China Jushi, which is also up more than 300%. So you can see that these names, the smaller names, tend to be in the onshore markets, and we have investors really shifting their focus from offshore to onshore for those opportunities. And Goldman Sachs, in fact, say that they still right now prefer onshore over offshore. Goldman Sachs also like onshore for these hardcore tech names. So a lot more opportunity there compared to the offshore stocks.
Bloomberg Asia Equities reporter Miniso there. More ahead here in the Asia trade. This is Bloomberg. Australia is rethinking its ties with Washington, with a recent Lowy Institute poll showing 51% of Australians now see China as more important than the US. Confidence in President Trump has also plunged to record lows. Pew Research saying that Australians, once among America's most positive partners, are now showing steep declines in confidence and favourability. Together, the surveys highlight the country's growing unease with US leadership. Well, joining us now is Charles Lyons-Jones, who's a research fellow at the Lowy Institute. Charles, really great to have you with us.
Pleasure to be with you.
This is a trend that we've seen in consecutive surveys now.
Well, confidence in President Trump has indeed cratered, but support for Australia's alliance with the United States remains sturdy. 60% of Australians may have no confidence at all in the President of the United States to do the right thing in world affairs, but 73% of Australians still say that our alliance with the United States remains important to Australia's security. That shows that Australians are highly capable of separating their opinions of President Trump as the occupant in the Oval Office from their views on the alliance as an important arrangement which has safeguarded Australia's security for over 50 years.
But you've got to expect that the lack of predictability in foreign policy, the willingness of this president to kind of throw out the playbook is creating some unease.
It certainly is, and Australians almost unanimously disapprove of many of the Trump administration's key foreign policy priorities. significant majorities disapprove, for instance, of the use of tariffs in order to coerce countries to comply with the Trump administration's objectives. And over 9 in 10 Australians disapprove of President Trump's threats to Denmark to relinquish sovereign control of Greenland. That shows that Australians have a strong distaste for Trumpism, but they do support the alliance on the whole.
What's interesting to me is a growing affinity with Beijing.
Well, Australians are pragmatic on China. Australia's trading relationship with China is by far and away our largest, with over $300 billion in two-way trade between the two countries on an annual basis. Australians likewise overwhelmingly support the trading relationship with China, but they're also clear-eyed about the security threats facing Australia. For instance, 6 in 10 Australians say that China is likely to pose a military threat to Australia in the next 20 years. But a similar proportion also say they see China more as an economic partner than as a security threat. What that shows is that Australians are highly capable of holding two conflicting truths in their heads at the same time.
And part of that conflicting reality is the risk posed by Beijing, its ambitions in the South China Sea, and there's always a lot of discussion about the future of Taiwan. But this poll was taken at a time when the US instigated the war with Iran, right? Did that have an impact?
Well, we did poll on that specific question. We asked Australians whether they approved or disapproved of the Trump administration's strikes against Iranian nuclear targets and regime targets. They were divided on both of those questions, but as the war dragged on, 8 in 10 Australians said they disapproved of President Trump's handling of the military campaign in Iran. So Australians don't necessarily trust the President of the United States, but they are pragmatic about the importance of the alliance to Australia's security.
What does the survey reflect when it comes to broader confidence in other world leaders?
Well, confidence in world leaders has taken a bit of a hit across the board. For instance, confidence in Australia's Prime Minister Anthony Albanese has fallen 7 points from last year's poll to 53%. And there isn't Australians don't have much confidence in Xi Jinping to do the right thing in world affairs either. And I think what that reflects is a deteriorating strategic environment where Australians, on the whole, don't feel safe when they're thinking about world events.
The China sort of tension, but also the I won't call it an alliance, but certainly the recognition of its importance is an interesting one, right? Is it sort of the recognition that, for better, for worse, that trade relationship is going to be there and remains dominant for Australia?
It's a really interesting question, and one of the key findings of this year's poll is that 6 in 10 Australians say they feel pessimistic about Australia's economic performance over the next 5 years. Given the importance of China's two-way trade with Australia, I think Australians are starting to see China more as an economic partner than as a security threat, as was the case only a few years ago.
Do you think there's anything that could reverse these trends? Obviously, we're heading into midterms, potentially still a lot of upheaval in the US political system to come.
There certainly is a lot of upheaval in the US political system to come, but there is also a lot of upheaval that China can cause as well. Xi Jinping has instructed the People's Liberation Army to ready itself for a successful invasion of Taiwan by 2027. That, for instance, would be an event which would significantly erode confidence in China's President Xi Jinping to do the right thing in world affairs, I suspect.
You talked about falling approval for Australians leaders or leader. What does that reflect in terms of foreign policy positioning?
Well, Australians are also less supportive of the Albanese government's foreign policy, but I think that that needs to be understood in the context of Australians feeling less safe when they're thinking about world events. The strategic environment is a difficult one for Australia. There are a lot of tough choices, and it's a tough time to be a world leader.
Charles, really great to have you with us with the fascinating results from this year's poll. Charles Lyons-Jones, who's a research fellow at the Lowy Institute. We'll have more on Australia Ahead every Tuesday at 10:40 a.m. if you're watching in Sydney, 8:40 a.m. if you're catching us from Hong Kong. More ahead here on the Asia Trade. This is Bloomberg.
The FIFA World Cup has delivered its biggest upset so far, with Paraguay sending four-time champions Germany home in a dramatic penalty shootout after they finished one goal each following extra time. It was Germany's first appearance in the knockout rounds since they last won the tournament in 2014. And earlier, there was heartbreak here in Japan, crashing out in a last-minute defeat to Brazil. The Samurai Blue led 1-0 at halftime, but Brazil equalized just before the hour mark and dashed Japanese dreams with a winner in the final minute of injury time. And over in South Korea, we're breaking down the $880 billion investment into chips and data centers. Bloomberg Economics says that the AI boom will help fuel South Korea's growth to 3.5% for this year, from a previous forecast of 2.6%. This is, of course, as we saw the Kospi now being supported by the tech sector, Samsung, SK Hynix, both in the $1 trillion club, that exclusive club with two South Korean companies, plus TSMC, the third one here in Asia, all to do with these huge investments around artificial intelligence. The government now saying that it supports extending to power, water, regional infrastructure, and AI ecosystems in this bid to make South Korea really the AI hub for the future to come, Heidi. Of course, we have seen this rally massive in Samsung Electronics, SK Hynix as well. SK Hynix, in fact, expected to list in the U.S. as well this summer.
Yeah, Shery, we've talked a lot about how this is becoming kind of a sector-specific boom to broaden out into the impact on the broader economy, right? And this is just kind of, I think, at the forefront of that. South Korea's growth to 3.5% is expected to be partly and largely driven by this AI boom from a previous forecast of 2.6% there. You've talked about these big ambitions, this $880 billion plan to drive that Korean AI lead from Samsung, from SK Hynix. So the government is really kind of making these orchestrations of at least 1,350 trillion won from these companies into chips and new data centers. We're looking at the doubling of the memory production capacity within 5 years, the securing of world-class manufacturing capabilities to try and really accelerate their advantage over competing nations, the likes of Taiwan, for example, the likes of the US, of course, also trying to make its own trajectory, as well as Beijing, also seeing that a different track, if you will, when it comes to its domestic AI ambitions. So we are continuing to watch these stocks in reaction to that plan. The two major plants in the southwest for a total of 800 trillion won are key to that rapidly expanding production capacity ambition. We'll leave that story here, but let's take a look at some of the other top corporate stories that we're also tracking this hour. And Stellantis planning to start selling a new China-made Jeep model in Europe by 2030. The large SUV will be jointly produced with China's Dongfeng Motor and built at its Wuhan facility. The new venture continues the group's reversal of a pullback from China under the former CEO, Carlos Tavares. Rocket Lab is buying the satellite operator Iridium in an $8 billion cash and stock deal. The acquisition combines Rocket Lab's launch and satellite-making businesses with Iridium's low Earth orbit network and spectrum assets. CEO Peter Beck says the merger will create an end-to-end space communications provider.
Rocket Lab today, we're the second most frequently launched rocket, and we have a large spacecraft business and components business. But really the third leg of the stool was always an application. And by combining Rocket Lab and Iridium together, we really make that complete picture. And what that essentially means is we are a self-launching company. And I think if you look at other companies that have their own rockets and can build their own satellites, it's a pretty powerful combination.
We continue to watch the tech sector over in South Korea with the $880 billion in investments in the sector. Let's discuss and break down those numbers with Bloomberg's Korea economy and government reporter Hee-Soo Lee. Hee-Soo, before we get to the details of this announcement, just talk us through the timing. Why this announcement now?
Yeah, right. So South Korea's economy basically relies heavily on semiconductor right now due to the AI boom. So, we have the stronger growth and shipments are really great because of the AI exports. So the government is really trying to use this moment to use use this moment to stay ahead of its rivals, such as the US and China. So rather than waiting for the companies to invest on their own, the government stepped in to accelerate spending on chip production and AI infrastructure to lock in its technological lead.
We're also seeing investments outside the metropolitan capital area of Seoul. We're talking about Gwangju, Cheonan. Why this push towards other regions?
Yeah, so there are mainly two reasons. So the existing chip hubs around Yongin and Pyeongtaek are running into constraints such as land, power, and water. Second, the Lee administration wants the benefits of AI boom to spread beyond the capital region. So the idea is create this new tech, high-tech cities like Silicon Valley or Singapore's One North, where factories, universities, research institutes, and even housing are built together instead of concentrating everything around the Seoul region.
Bloomberg Korea economy and government reporter Hee-Soo Lee, they're joining us from Seoul. We do have breaking news right now here in Japan. We are now seeing the Japanese yen breaking a new low against the U.S. dollar. We're past that 162 level per greenback. We're talking about the weakest level since December 23rd of 1986. Of course, this as we continue to hear from Japanese authorities, including the Chief Cabinet Secretary Kihara, speaking in Tokyo, saying that they will take appropriate action on currency as necessary. But of course, the rate differentials between the U.S. and Japan continue to pressure the currency. We're seeing the Japanese yen falling against the greenback past 162 per dollar. The China Show is next. This is Bloomberg.